So we've ended the 4 days of strong selling, but nervousness remains. Hi everyone, welcome to the Traders Circle weekly market update. Today is Tuesday, the 27th of June, and just before I get into it, you do need to be aware that anything I say is general advice only. So it does not consider your personal financial circumstances, and you have to decide if what I'm saying is appropriate for you. The big news this week is the CPI reading. That'll be released at 11:30 a.m. tomorrow morning, Australian Eastern Standard Time. CPI is taken as a measure of inflation, and obviously we all know that inflation is extremely high at the moment. The last reading was 6.8% year-on-year price growth, something that cost $100 a year ago, $106.80 this year, and this reading is expected to show 6.1% year-on-year price growth. So it is expected to come down, but 6.1% is still ludicrously high, more than double the RBA's target range of 2 to 3%, and an unacceptable level of inflation in our economy. Now, the last few CPI readings, the expected number has been way off the actual number. So it'll be interesting to see if this reading that's the case, or if we can see, a fairly accurate and a drop in inflation. When I say the last readings, the expected number's been off, I mean the expected number has been far too low. The actual inflation number has ended up being much higher than expected for each of the last few readings. That's been really negative for our market, and if it happens again tomorrow, if we're above 6.1%, I imagine we'll see some selling in our market. So it's going to be a pretty big event for our market. We would expect the market to have a directional move following the announcement, either up or down depending on how the number comes out. And if it's a strong number, even if it's in line with expectations, that means more interest rate rises. The RBA is going to have to keep going until this number starts coming under control, and like I said, still more than double the target range. So they are still probably going to have to keep lifting rates, especially when equivalent economies around the world are well in advance of our own cash rate, of our own official interest rates. You had the Bank of England last week lift interest rates. I think they're just above 5% now. In the US, they're at 5.5%. Canada's up there. New Zealand's up there. We're probably going to have to keep going till at least levels that we're seeing in those economies as well. Now, just on that, the RBA will meet on Tuesday next week for their July rate decision, 4th of July. And I would expect the RBA to raise again. This is despite their fairly dovish monetary policy statement last week, where they talked about weakening economic fundamentals. They talked about the potential for recession in Australia, when they should have been talking about inflation. They should have been talking about CPI. They should have been talking about the very low unemployment, and they should have been talking about further rate rises. Despite the fact that they didn't say what they should have, I still think they're going to lift interest rates. I still think they've got to keep lifting interest rates until they basically do what their mandate says they have to do, and that is get inflation under control and maintain full employment. Where beyond full employment, inflation is not under control, they should be lifting interest rates, and I believe they probably will, especially after all the criticism that they've received, not least of which my video last week. So that'll be next Tuesday, probably going to be another 0.25%, taking us to 4.35. Obviously what they do announce will also depend on tomorrow's CPI reading. If we have a huge surprise drop in CPI, maybe they will pause. If CPI is stronger than expected, maybe we'll see a 0.5%. A little hard to say at this point, but I think fair chance we're going to see 25 basis points, 0.25%. And finally, that takes us to the market. The market has been volatile. It's been all over the place. If you watched my video last week, I said I thought we'd overextended on our push-up, and indeed, over the last week, we've seen a pretty strong sell down, completely reversing that spike up. In fact, we dropped below where we were at the start of that spike. Market has been up and down, back and forth, roller coaster ride in a very, very volatile fashion. This is, I believe, purely around nervousness around CPI, nervousness around interest rates, slight hopes around strength in overseas markets, slight hopes around a potential peak in overseas interest rates, and then the crashing reality of more rate rises here in Australia, despite the high likelihood of a recession in the later parts of this year, early next year. Alright, so here we see a chart of our XJO, and we really can see that has been a volatile couple of weeks. So we were in this giant pennant pattern for the last few months. We had this downtrend here, We had this uptrend here, and it was actually the downtrend that broke first. So we broke the pennant to the upside, and then we headed to the resistance level at 73.70. And that was the video last week. We were sitting up at this resistance. And I did say at the time that it looked like we'd overextended. Wouldn't be surprised to see some selling given the negative economic situation in Australia. And sell down we did. And it was a pretty severe sell down, enough to break the uptrend as well. So that uptrend line's now gone as well. But we did manage to, by the skin of our teeth, hold on to 70.75 as the support level. It wasn't very convincing. It wasn't pretty, but it happened. And indeed today we did spike up a little bit. Now technically, with the market having held support, and previously having broken through that downtrend and breaking through a potential resistance, you'd technically say we look kind of bullish. We've got this hold of support, this roughly doji day, this sort of bullish candlestick here, this break higher today, a little early on the stochastic, but you would say that given these technicals, you'd expect to move higher. Potential targets, maybe this peak here at 72.40, maybe 7,300, something like that. But I think it's just a little uncertain for the time being. I want to see the CPI reading tomorrow. If CPI is high, the market's going to be pricing in more interest rate rises, and that might sort of stymie that potential bullish move. Similarly, if we do see CPI come in lower than expected, perhaps under 6%, we could see a move back to 73.70. So for me, at least in the very short term, it will come down to that CPI reading and how that influences the RBA meeting next Tuesday. The technicals looking a bit more bullish after holding support, but certainly not looking super bullish. It's not the most convincing signal. Today we weren't able to break above the 200-day moving average, and really it was we opened higher and we sat there for the entirety of the session basically. So I'm looking for another bullish candlestick tomorrow, possibly on the back of lower than expected CPI, or I'm looking through a break of 70.75, possibly on the back of higher than expected CPI. Until then, the directional move is a little bit difficult to call, so I'd just be waiting for that signal. Technically looking more bullish, fundamentally looking more bearish. If we have a look at the US market, they're a lot more bullish than our own market. They've been on a very nice uptrend for the last 3 months. And that is on the back of their CPI coming down. So their last CPI reading continued to fall, came in lower than expected, and that basically says to the world that we may be approaching the end of the US Federal Reserve tightening cycle. Now the Fed, they're not sort of going to be that quick to say it's over. In fact, they don't want everyone to rush out and make exuberant spending decisions. They want everyone to still fear their wrath, still fear that there's going to be many more rate rises to come. But the reality is, it looks like their job is almost done. Not quite just yet. CPI is still above target, but it's coming down and it could be within target before we know it. And they've managed to do that without destroying the economic fundamentals, without destroying economic growth, without causing massive unemployment. And so, it's a pretty good situation over in the US to contrast against our own negative situation. And that's one of the primary reasons their markets rallied. At the very least of which the view that they're approaching the end of the rate tightening cycle. They did find some resistance at 44.50 a bit over a week ago, and since then they've been drifting back off. I'd be looking for a move there towards 4,300, the previous resistance, which may now act as support, or this sort of medium to longer term uptrend line, and then I'd look for a bounce from there. Alright guys, that's it for this week. Hopefully you enjoyed. If you did, let me know in the comments below. If you didn't, keep it to yourself. Click the like button, click subscribe, and I'll see you in the next one.